All right, oil prices resuming the seesaw action that's been characterizing the market lately. At the moment, take a look at crude prices. Here we're seeing $68.07 a barrel. But where are prices heading given the sluggish global economy and active speculation in the market, sort of combating forces? Joining us now is Fadel Gheit, Managing Director of Oil and Gas Research at Oppenheimer and Company. Fadel, thank you so much for joining us. Listen, what do you think about the trading range, first of all, that we've been seeing? I mean, hovering in the $60 range, is that too much for oil, you think?
Well, oil prices have totally disconnected from market fundamentals, actually for the last 3 years, not only in the last 6 months. While the outlook for oil demand continue to decline, oil prices are up 55% from January. Oil prices are double where they were in December of last year, although the outlook continued to look worse than before. There is no question in my mind that oil prices are inflated. The question is by how much? $10, $15, $20, I do not know, but I can tell you they do not reflect market fundamentals right now. Demand continue to weaken, or the demand outlook continue to weaken. Supply is ample. We have inventories coming out of our ears. Nobody needs oil anymore. All the refining system around the world is cutting their runs. Why? Because there is no demand. So that will continue until or unless we see an uptick in economic growth, which doesn't look likely anytime soon.
So isn't the market, though, discounting that? I mean, aren't speculators in there thinking that they're going to see it and they want to get ahead of the curve?
It's very hard to tell. Last year we had $148 oil prices, and the same people that push oil prices higher were predicting $200, $250, and within 6 months oil prices were $33. So we had a huge range last year, and we continue to have very large range from $30 to $72. That's obviously a huge jump. Now oil prices pulled back, but they are going back and forth. In my view, we are likely to see oil prices stabilizing around the current level because we don't want to see $150 oil anymore. But the oil-producing countries, including Saudi Arabia, do not want to see $30 oil either. So we're trying to find a compromise here. But the blame, in my view, for this speculation is that the CFTC is not doing its job. They're talking about regulation, but they are not doing anything about it. There's only going to be a public outcry to put checks and balances that the government is doing its job. And so far, they are not.
What do you think needs to be done about, then, speculators in the oil market?
Just put the foot down. Do the 5 points that I recommended a year ago. And basically, you need some element of speculation, if you will, to keep the market moving. But you cannot have the speculator controlling the oil market. You can have trading limit. You can have a lot of bells and whistles to basically keep the major volume of oil trading in the hands of the real user, whether the airlines or the refiners or the oil companies. But you just cannot allow financial institutions to have 80% of the trading volume every year, year in and year out. The other idea, you just cannot allow pension fund to gamble with people, pension in playing the commodity. I think it's a bad idea. I think we should take it back. I think there should be some government regulation that be enforceable. Not government regulation just out on paper, because nobody pays attention, because people know that the government will bark and will never bite.
All right. Hey, Fadel, thank you so much for spending some time with us. Fadel Gheit there, Managing Director of Oil and Gas Research at Oppenheimer and